Airbnb is a company that needs no introduction, and shares are popping nearly 11.5% in the after hours as they reported their Q4 results. We'll get into the print and all the key metrics this company likes to provide, including the take rate and the nights and experiences booked. We'll also jump into the Q1 guidance this company provided from a revenue perspective, and then we'll also talk about some risks associated with the stock if you're planning to hold it as a long-term buy and hold investment. And then if you're not, if you're instead looking to maybe swing trade shares of Airbnb, we'll highlight some levels or maybe it would make sense to do so considering the setup is quite attractive for this company. Hey guys, hope you're doing well out there. It's time to check in with shares of Airbnb, which over the past 1 year are down about 7.5%, but making up for those losses in the after hours. You're seeing shares up about 11%. Year to date, you are up 6%, so you're adding to those gains. And this company went public back in 2021. So you don't really have a 5-year outlook with this, but look, you've sort of chopped around sideways. You've gone up as high as $200. You've gone maybe down as low as in the 90s. So you've sort of made a pretty wide range, but you've relatively held sideways with shares of Airbnb. And now in the after hours, you're probably talking about a company close to $100 billion market cap. So keep all those things in mind as we go through Airbnb's financials. Now, Q4 revenues came in at $2.5 billion. That was good for nearly 12% growth year over year. Came in line with expectations on that top line. Now, Airbnb did say that the revenue primarily grew due to the solid growth in nights stayed and a modest increase in the average daily rate. We'll take a look more into that, but first let's jump into the guidance that this company provided for the current Q1 we're in. They said that for Q1 2025, we expect to deliver revenues of 2.23 billion up to 2.27 billion. That would represent growth of roughly 4 to 6%. Wall Street was looking for a number closer to 7% growth on the top line, with revenues coming closer to $2.3 billion. So at their midpoint, Airbnb coming about $50 million shy compared to Wall Street estimates. Now, a couple things to note and a couple things that Airbnb did highlight is that they're seeing a impact from foreign exchange rates. So once you exclude that foreign exchange impact, revenue growth would be closer to 7 to 9%, considering the fact that the US dollar has been quite strong over the past. And Airbnb is a company tends to do a fair amount of international business, especially over in Europe and Asia Pacific. They are impacted due to foreign exchange rates. The other thing that impacts Airbnb though is one-time calendar events. So they did say in Q1 of last year, they saw that timing impact of Easter and leap day falling in that quarter. And so once you're lapping that calendar quarter, you're seeing a unfavorable impact due to the fact of that one-time calendar event. And so once you strip that out as well, you would anticipate nearly 10 to 12% revenue growth over at Airbnb. And this is an important number. This is sort of the organic revenue growth rates once you strip out foreign exchange, once you strip out one-time calendar events that Airbnb tends to not have control over. That 10 to 12% would come pretty strong in terms of what Airbnb is expected to do over, call it, the next 5-6 quarters as well. This is a company you can expect to grow in the low teens, maybe as high as 12% on the revenue side for the next couple of quarters. And certainly if they can come somewhere in the mid-teens, that is your upside with shares of Airbnb. Now, in terms of a long-term risk, this is one of the reasons why if you're a long-term investor, you would be a bit cautious in picking up shares of Airbnb, is because they have some regulatory risks associated with their business. Now, in Europe, they have some pretty strict crackdowns on vacation rentals. This news story was a couple months ago from Barcelona as they began to crack down pretty strictly on short-term vacation rentals like Airbnb. What that tends to do is push up the prices of local housing. It also reduces the amount of available houses in terms of long-term stays for the local population. And so that's why you have a lot of cities kind of against Airbnb, especially over in Europe, but also happening in major US cities like I believe New York, also I believe in Toronto, because housing prices have skyrocketed and it's so tough to find long-term housing. They're sort of cracking down on Vrbo along with Airbnb, anything really short-term. And of course, that's beneficial for your hotels. And that's sort of the argument that Airbnb has been making, the fact that you're sort of allowing these hotels to pop up and run, but you're not allowing short-term rentals through Airbnb. But look, when you operate a business like this, you have to follow and comply with local regulations, which may not be the same. In fact, they're unlikely to be the same across the world. And that brings a challenge to a company like this, very similar to a company like Uber, which also has to comply with local laws and regulations, and certainly has to deal with local politics, especially over in Europe, which tends to be a bit harsher on these sort of things. So keep that in mind. You have a long-term secular tailwind in terms of vacation and more money being spent on nights and experiences, but you do have headwinds in the sense of regulatory backlash over at Airbnb. Now, in terms of the quarterly summary we got from this most recent quarter, you saw revenue growth come in at around 12%. That lines up pretty favorably with the nights and experiences booked, basically in line at close to 12% growth year over year. Sequentially, you did see an acceleration from 8%, call it up to 12%. And look, Airbnb is a company which doesn't actually tend to see the majority of their revenues come in the Q4, considering the fact that Q4 is a holiday time period. A lot of companies actually find that their Q4 is the largest. For Airbnb, that's not the case. Their Q1 and their Q2 is actually their largest, considering the fact that that is spring and summertime. Here in North America, a lot of people tend to book vacations and experiences for the summer traveling months, summer traveling season, also when airlines tend to see the vast majority of their profits. So keep that in mind. This company is a bit more seasonal, and the first half of the fiscal year tends to be stronger in terms of a dollar amount over at Airbnb. Now, in terms of growth rates, you are seeing that accelerate also on the gross booking side, up 13% year over year. Again, an acceleration from a quarter ago, which is impressive, but you are seeing those growth rates slip, at least on a year over year perspective. And then last thing to note is the average daily rate in terms of the gross booking value per night. This marginally continues to increase, up right around 1%. Last year, you were about $156 in terms of the average daily rate. Now that's up just fractionally, up to $158. And look, you might think that just a $2 bump up on your average daily rate isn't that significant, but when you're talking about nights and experiences in the range of hundreds of millions for a quarter, if you add on basically $1 or $2, that adds up to about $200 million in the most recent quarter for Airbnb that they were able to generate from just a 1% modest increase on that average daily rate. So this is something you'd like to see at least continue to grow modestly, about 1-2%. You don't want to see it grow too fast, because that could put off some consumers from Airbnb, and you certainly don't want to see it decline, because then they'll certainly be losing pricing power over at this company. So from that perspective, the metrics over at Airbnb look good. The other important thing to note, though, is this company's take rate, which is defined as the revenue divided by the gross booking volume. Consider the fact that you have maybe $100 being spent on Airbnb's platform, but the fact that you have to pay out your hosts, very similar to how Uber pays out their drivers. This company pays out their hosts, and then they're left with a little bit of that gross booking value. And that rate came out to 14.1%, which they did say is down slightly year over year. Did mention that that is due to the fact you had a one-time benefit from unused credit cards, or unused gift cards in Q4 of last year. So probably once you exclude for that, the take rate would roughly be flat, in my opinion. And this is an important number. You don't want to see this fall too far over at Airbnb. Now, from a financial perspective, things look fairly good over at this company. They certainly don't have huge software-like margins, but if you believe that this company can grow somewhere in that low teens, maybe 12% on the revenue side, and they're able to keep expenses in check over the next couple of years, then certainly the value, the intrinsic value over at Airbnb has room to continue to expand. And so you saw those top line revenues go from 2.2 up to, call it, $2.5 billion in the most recent quarter. For the full year, you went from about 9.9 up to $11.1 billion. Now, costs and expenses did relatively rise in line with those revenues, as you had cost of revenues go from $380 million up to $420 million. Operations and support also continuing to basically increase modestly, not a huge increase, but about 10% on that side. Product and development is one area this company is aggressively spending on, from $430 million up to $530 million, nearly $540 million. They are trying to introduce more different sources of revenue. I believe they introduced icons sometime last year, maybe 2 years ago, and so they're trying to diversify away from just their core Airbnb business, which still is pretty profitable, but they're trying to increase more and more ways to diversify their business. And for that, they're spending a bit more on product development, also on sales and marketing, which went from $420 up to, call it, $550 million in the most recent quarter. So this company tends to still have to advertise a fair amount to continue to see revenue growth. Keep in mind, this was also Q4, so you tend to see a bit higher ad rates in terms of sales and marketing. And then G&A looks pretty good. You went from 1.2 down to, call it, $200 million. But keep in mind, I believe last year they recognized a nearly $1 billion G&A expense. And so year over year, that G&A, if you strip out that $1 billion, went from basically 200 million, call it, up to 250 million. So total cost and expenses look pretty good. And even your operating income swung from an operating loss of close to 500 million, now sitting at 430 million. But keep in mind, once you strip out that $1 billion G&A, things look relatively in line, your expenses did grow, and your operating income would be, in my opinion, relatively flat on a year-over-year basis. Similar thing we see on a 12-month basis. If you strip out that $1 billion G&A charge, you get basically $2.5 billion of operating income last year, and then in 2024 you generated basically $2.5 billion on the operating income side as well. This company tends to earn a fair amount of interest. We'll take a look at their balance sheet, which does look pretty pristine. The other important thing to see with Airbnb is they are reducing those diluted shares as they continue to execute on that buyback. Now, from a balance sheet, like we said, things look pretty good. This company has a fair amount of cash, sitting at basically the same amount of cash as last year, about $11 billion in cash, short-term investments, and that is balanced out by just $2 billion of long-term debt. They don't have any other major convertible notes or debt outstanding, considering the fact that Airbnb doesn't actually own the homes. They're simply a platform, very similar to Uber. I love to draw the comparison between Airbnb and Uber. They're pretty much a platform and a network, and kind of just manage the supply and demand for both houses, and of course with Uber for mobility as well. So from a balance sheet perspective, things look good. You have more cash than debt, and you don't have a ton of liabilities. From a cash flow perspective, this is really where things get exciting with Airbnb. This is what a lot of bulls certainly would point to. You have $2.6 billion in net income for the full year. That translates into nearly $4.5 billion of operating income, which is pretty strong growth. Last year you were closer to 3.9. Now you're sitting at $4.5 billion of operating cash flows, and you can't find a property, plant, and equipment line on this cash flow statement because it doesn't exist. This company's free cash flows, pretty much what their operating cash flows are. They tend to basically do very, very little capex, and so they don't even break it out. And so look, you have $4.5 billion of free cash flow. Even if you apply a $100 billion market cap, considering the after hours move, you're sitting at basically a 4.5% free cash flow yield from a trailing 12-month basis, and that's certainly not bad. In fact, I would argue that's actually pretty good over at Airbnb. And so that is your bull case from a valuation perspective. Free cash flow yield certainly looks compelling. On a trailing basis, you assume maybe they can do $5 billion of free cash flow for 2025, and that brings your forward free cash flow yield around 5%. Now keep in mind that isn't factoring in stock-based comp, which is sitting about $1.4 billion. So when you strip out stock-based comp, your free cash flow yield may be sitting closer to 3% on a trailing basis, but still 3% once you strip out that stock-based comp, still looking fairly good. And this company doesn't have a ton to invest in, so what do? They come in here, buy back their common stock to the tune of $3.5 billion for the full year. I believe they still have another $3 billion left on their buyback, and I probably could assume that's what they will do in 2025. This company tends to generate a fair amount of cash flows. They put that towards the buyback, and that's how they're returning cash to you, the shareholder. So things are looking good over at this company. You certainly have to believe that the travel demand should continue, especially over in Europe. You have a lot of people traveling from here in North America into Europe, at least during the summer months, and that tends to help, especially the spring and summer quarters over at Airbnb. And certainly this company, if you expect them to grow in that low teens, that is a bullish sign. And shares are moving higher in the after hour. It continues to push up nearly 14% now, pushing up as high as $160. Now, this company was in a pretty well-defined uptrend. You did break through that, and since then you've been chopping around sideways over the past, call it 2 earnings reports. But now, considering the fact you're once again entering that uptrend pretty decisively, I would anticipate shares of Airbnb to once again find some footing, continue to channel higher. Now, in terms of channeling higher, your opportunities lie in picking up shares when they're closer to the bottom end of the range, especially if you're a long-term buy and hold investor. Anytime you can get pullbacks closer to the bottom end of the range, in this case would be around $150, you get a pullback back to there, and you're probably stepping in and buying. If you are a bit more conservative, bit worried about losing capital with this one, probably set a stop loss, maybe $5 underneath. And if you break through that with shares of Airbnb, well, hey, you get stopped out. But your upside with that is probably a new back test up to at least these highs in the 170s, if not breaking through those previous set of highs in order to maybe test all-time highs up here in the $200 range. And in terms of a swing trading perspective, look, if you don't want to go long Airbnb, you have sort of a similar setup from a swing trade. You kind of pick up shares, maybe if you want to be ballsy, you pick up shares in the after hours, you set a stop loss maybe down here in the 150s, so you're risking about $10 to the downside with the hopes that you at least come up here and retest not just the $170 range, but you actually break through that and you come back and retest your all-time highs up here in the 200s, which would be a pretty big move over at Airbnb. In my opinion, this is one of those stocks you would want to set a stop loss on because you tend to see huge volatile moves. And so if you get a huge move to the downside, chances are you'd want to be stopped out somewhere here in the 145s, maybe in the 150s, because if you decisively break through those levels, you're coming back down here in the 120s as you have pretty solid support at that level. That was my take on shares of Airbnb. I think you have pretty good fundamentals over at this company. The valuation also isn't egregious. You're about 30 times a forward earnings multiple, and so you have some secular tailwinds also acting in your favor in terms of a peak travel season coming up next year in terms of Europe demand. Some things to watch out for though from a long-term perspective is if you get more regulatory scrutiny on Airbnb, along with its competitors. Look, if Airbnb is being hurt, so will Vrbo and other short-term rentals as well. So if Airbnb sees pain, I'm sure their competitors would as well. But in my opinion, Airbnb's biggest competitors are probably hotel chains. And well, if there's more regulatory scrutiny on this company, you probably have a bit more room for those traditional hotels to continue to thrive. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.